Good evening, my YouTube family. How's everybody doing today on this lovely Thursday evening? Hopefully, everybody's doing wonderfully great. Hopefully, you had a great green day in the market, guys. As you can see, this fella right here did. My account is sitting at 10,269. I was up 12.46% for the day, roughly $1,137. Not too bad for the day, guys, considering market was kind of, it's been up and down for the past couple months. We've been in this correction. I mean, the market can't make up its mind what it wants to do, guys. You know what I mean? And I was down all the way to like 6,300. That's the lowest I've ever gone in my account since I've been investing. And at one point in time, my account was sitting at almost 29,000, guys. Lesson learned. You know what I mean? I was just heavily invested in in one sector, you know what I mean, and which was in EV and in the tech sector, and that's what got freaking creamed, during this correction, and in growth stocks. You know what I mean? You need to diversify your portfolio, guys. Don't just be in one or two sectors. Diversify your portfolio. It's always good, you know what I mean? But nonetheless, I am clawing my way back up. And in due time, I'll be right back where I was at. You know what I mean? It's all paper loss, as they call it. You don't lose until you sell. You know what I mean? Then that's when you technically lost, guys. You can get it all back. You know what I mean? You just gotta continue to have a positive outlook on the market, no matter what. Continue to push forward. Don't panic sell. With all that being said, none of this is financial advice, guys. This is just me, I'm a G, just sharing my thoughts and opinions as I invest in crypto and in the stock markets, guys. You know what I mean? If you guys can do me a favor, guys, and show me some mad love, you know what I mean? It don't cost you nothing, guys. It's free of charge. You know what I mean? It takes you a couple seconds to hit that thumbs up, or maybe hit that notification bell so you can be notified when I come through with the latest and the greatest. Guys, I'm not going to be too long today. I'm going to just briefly touch up on Playboy, ticker PLBY, and read you an article on why Wall Street is bullish on Playboy and me as well, guys. That's why I made that video the other day, because I think this is a really, really great growth stock to keep on your radar. I had two teeth pulled today, guys, so I wasn't even going to make a video, but I'm just going to briefly make a quick video on touch on Playboy. Tomorrow, I'm going to be making a video on in the shipping industry, guys. And shipping containers and dry containers, so on and so forth. I'll probably give you guys, I think, like 8 to 10 tickers in that sector. I'm very bullish in that sector. I'll read you an article as well on why Wall Street is bullish as well in this sector. You know what I mean? So without further ado, let's get it. All right, where's my article here? Okay, guys, here we go. So it says Playboy Group bullish on the Playboy Bunny. This was today. It says Playboy Group reported its first quarterly results since it began trading as a public company in February. Strong growth has been fueled by a focus on direct-to-consumer merchandise across several product categories. Management is offering a positive outlook, supported by significant growth opportunities, including entering new lifestyle segments. We are bullish on the stock and see shares as attractive, priced against a peer group of other major global premium brands. Guys, you know what I mean? Playboy's been around forever, dude. You know what I mean? And with them being on the market, it's cool, but like they didn't need to be on the market to make money. They've been making billions of dollars on a yearly, consistently basis. You know what I mean? But now with them being on the stock market, guys, now we can make money off of Playboy. As they make money, we make money, right? Hopefully, if you choose to invest in this company. Like I said, I think this is a great, whether short-term play or long-term play, I'm invested in it for the long run. I think it's going to do great. Playboy Group, which manages the iconic Playboy brand, made a return to the stock market in February through a SPAC merger IPO. Following years of declining magazine and media sales, the business model has shifted to focus on direct-to-consumer retail merchandise and new licensing opportunities. Beyond a portfolio of adult wellness products, apparel goods, and grooming supplies, the company has entered lifestyle segments like online casino gaming and even cannabis. Indeed, shares of Playboy are up over 110% in just the last month, boosted by a strong Q4 report with a positive outlook for management. We are bullish on the stock. Let me repeat that, guys. We are bullish on the stock, which is setting up to capture significant growth opportunities supported by overall solid fundamentals. Playboy financial recap. Playboy Group reported its fourth quarter results on March 23rd with a net loss of $0.5 million, which favorably narrowed from $6 million in Q4 2019. So, guys, obviously, they lost $6 million last in 2019, guys. You know what I mean? And then the following year, here in 2020, fourth quarter, they only lost $500,000, guys. That's very good. Revenues for the quarter climbed an impressive 118% year over year to reach $46.3 million. For the full year 2020, revenue climbed 89% year over year to $148 million, while adjusted EBITDA, which included stock-based compensation and some other non-recurring items, improved to $28.3 million for the year compared to $13.1 million in 2019. So obviously, guys, 2020 was a better year for them than 2019. Go figure. We had a global pandemic going on in 2020, yet they did better. That's a brain scratcher, huh? Well, a lot of these companies, guys, actually done a lot better in 2020 when we had a crazy pandemic going on than what they did the previous year. A lot of companies. While licensing deals revenue still represent about 40% of the total business, with revenues climbing 20% to $61 million in 2020, the bigger story here can be the momentum in direct-to-consumer merchandising. Management believes that shifting towards company-owned products in key categories allowed for better control of the brand and consumer experience while driving margins higher. Playboy Group intended to move forward with an all-in-house fashion brand and expand apparel visibility. For context, Playboy branded goods represent over $3 billion in annual global sales, which the company intended to recapture a larger portion as a strategy going forward. Geographically, about 52% of sales are in the United States, while China is the next largest market at 27% of the businesses, suggesting there is more room to diversify in the rest of the world. In terms of guidance, while management expects to generate over $200 million in revenue for 2021, which represents an approximate 35% growth for 2020. Long term, the company expects to reach $300 million revenue and $100 million in adjusted EBITDA over the coming years. The company reported holding over $100 million in unrestricted cash following the reverse merger as February 11th. At the end of 2020, the company had $154 million in long-term debt. An estimated financial current ratio of 2x highlights the overall solid balance sheet liquidity position. Playboy growth strategy. Recent acquisitions have also been part of the growth story. In February 2020, Playboy acquired the Yandy brand, which focuses on lingerie. This past March, the group closed its most recent deal with the Lovers omni-channel retailer to expand its leadership into adult product categories. Yeah, guys, for those of you that don't know, Lovers is a chain. It's an adult store. That it's all throughout the United States. I know it's here in the state that I'm in. And, you know, it's a store that sells adult products from magazines, condoms, chains, whips, you know what I mean? Everything and anything that has to do with adult leisure, they have it, right? And they obviously purchased it, so that's better for them. That's more money. It says company data shows the sexual wellness sector is set to grow from $283 billion in 2020 to nearly $400 billion by 2024. Wow, that's almost double, guys. I didn't even know it was that big of a market. You know what I mean? But obviously, it shows you right here. They're giving the numbers, not me. $400 billion by 2024. That's pretty damn good. Playboy Group sees an opportunity for mass market distribution across a variety of channels, including online to traditional drug and grocery stores. Then it gives you some stuff here in the sexual wellness opportunity, if you want to look at it later. The new area the group is pursuing and opportunities in the market for non-fungible tokens, NFTs. I'm going to stop right here real quick, guys, because I am also into crypto. So NFTs, guys, are, like it says here, non-fungible tokens. Guys, this is huge. NFTs are here to stay, guys. It's not going anywhere. A lot of people think it's a fad. They think it's a bubble that's getting ready to pop. But in my opinion, guys, in the opinion of a lot of other people as well, important people, people that have lots of money, such as what's the guy's name that owns the Dallas Maverick? Mark. I can't remember his name, but you got NBA players. You got Snoop Dogg. You have, you got famous people all the way around from all sectors, from the music to sports, that are getting into NFTs because there is major money to be made, right? And this digital art that, like I said, is here to stay, and they want to wet their feet, guys, and get into this non-fungible tokens. Why? Because there is major money to be made in NFTs. So that's why they want to get their feet in it. They're going to obviously use Playboy's iconic bunny, and just Playboy in general. You think of Playboy, you think of Hugh Hefner and all those women that he had, him being a freaking player, and you know what I mean. And so I think it's going to do great in the NFT section if they choose to go that route as well. As a primer, the concept is based on the cryptographic properties of the blockchain, where a digital unit provides proof of ownership as a unique asset. The idea here is that the Playboy brand could sell some form of digital collectible stored on the blockchain, leveraging the company's vast photography collection and artwork archive that spans nearly 70 years. During the recent interview, CEO Ben Cole highlighted what the company believes is a massive long-term opportunity in NFTs. See, guys, there's massive money, guys, so they're thinking long-term, and I think, I'm telling you guys, man, put Playboy on your guys' radar. What's really unique about the NFT market is not only do you get paid on the first transaction, but you get paid on every subsequent transaction. So if these increase in value over time or trade hands over time, you continue to get paid on that. So we're looking at setting up a business really for the long term. We're going to enter the space slowly, but we think there's a massive opportunity for us long term, and there can also be a very long tail on this, so that's what excites us. Management presented several points accompanying Playboy's broader growth. Number one, accelerate direct sales growth in the U.S. through increased merchandising, cross-selling, and influencer marketing programs. Number two, develop an in-house streetwear fashion business to launch seasonal collections. Number three, expand sexual wellness offerings with private label products along with a lingerie collection. Number four, pursue growth opportunities into India and China as high-growth regions. Number five, regain licensing rights in the online casino gaming space. That's another big thing. Online gaming. That's a way for the governments to make money with taxes. You know what I mean? And with all this spending, that's why you got a lot of online gaming. Gambling getting legalized in a lot of states, whether it's online and sports betting and so on and so forth, guys. So they're trying to get their wet feet in that as well. You got the NFTs and online gambling. Number six, growth intellectual property portfolio by creating and relaunching new sub-brands. 7, invest in beauty, cosmetics, and men's grooming categories. 8, launch spirits, alcohol brands in Asia with joint venture partners. Number 9, expand CBD based products offering internationally, as well as launch THC cannabis products domestically pending legalizing at federal level. Guys, these guys are trying to get their feet wet in everything. As you can see, smart. That's good business. Leveraging extensive legacy art collection into emerging NFT space. And number 11, pursue strategic acquisitions as similar to the Lovers and Yandy deals. Analyzing and looking forward. The first earning reports for Playboy Group since going public offer several positive developments supporting the company's long-term outlook. We're particularly excited by the momentum in the direct-to-consumer initiatives and impressed by the multi-phase growth strategy. At the end of the day, the strength here is the Playboy brand, which we place at a level compared to companies like Coca-Cola and Nike. In terms of global awareness, indeed, Playboy Group notes that Playboy is currently among the top 20 licensed brands in the world, with a 97% brand awareness. What that means, guys, is they're known everywhere. It's freaking Playboy. Who the hell doesn't know about Playboy? I mean, I knew about Playboy ever since I was a damn little kid. You know what I mean? My grandpa would give me Playboy magazines when I was a kid. The result is that the company immediately commands a higher retail premium with limited advertising and marketing requirements. The bullish case for Playboy is simply that whatever category the company decides to enter, there is high chance of success. I agree. Like I said, it's Playboy, man. No matter what they touch, basically it's gonna turn into gold because it's freaking Playboy. Separating the bigger theme is the earnings opportunity, given the potential for expanding margins in the direct-to-consumer merchandising segments. In terms of valuation, the current market cap for Playboy at around $900 million against 22 revenues of $148 million imply the stock is trading at 6 times price-to-sell multiple, or 4.5 times based on 2020 revenue guidance from the company. The long-term target to reach $100 million in adjusted EBITDA implies the stock is trading at an approximately forward EV to adjusted EBITDA ratio of 11x. Our take is that these levels are reasonable in the context of the 35% top-line growth momentum established for this year and the premium the Playboy brand commands. At current 6 times price-to-sale ratio, it also tracks against some other luxury brands like LVMH, Moet, Hennessy, Louis Vuitton at 6 times, Canada Goose Holding trading at 7.3 times, Molecular Spa at 9.1x, and even Ferrari at 9.7x. While these companies each operate in a different segment, what they share in common is the brand appeal and premium connotation. In some ways, an advantage of Playboy in the group is that it has greater flexibility to be utilized in more product categories beyond simply apparel. Final thoughts. We believe 2021 is an important year for the Playboy Group to execute its growth strategy and reaffirm its earnings potential. The recent excitement around NFTs has boosted sentiment towards the stock. Like I said, guys, anytime you see NFT, people want to get in it just because it says NFTs, you know what I mean? So I think that's great for them to want to get into NFTs. Has boosted sentiments towards the stock, but our take is that it is only a small part of the outlook. There is a bigger underlying growth opportunity in the core business. Nevertheless, the incremental contribution can be positive and adds to the upside potential. Even if shares have already climbed significantly since the IPO, we remain bullish and see more upside potential. We rate Shirley Playboy buy as a price target of $32.50 for the year ahead, implying a 5.x forward price to sales, multiplying on current 21 sales guidance that can prove to be conservative. That's being conservative at 1350, guys. 32.50, right on the one that I read, guys. Other Wall Street analysts, I can't even remember. I think the price target was over $100 within the next 12 months or less, and I think it was $221 over 5 years. Yeah, it was $221 over the next 5 years. Well, I think they'll hit $200 easily way before that. It's Playboy, man. The main risk to watch is the potential for deterioration to the global macro outlook. At the end of the day, the various product segments for Playboy Group are in consumer discretionary categories which remain sensitive to income levels and economic growth. Any setbacks in consensus for ending the pandemic would likely pressure the stock and force a reassessment of the growth outlook. Monitoring points for the company in upcoming quarters include trends in opportunity margins and cash flows. Guys, my takeaway from all this is that obviously Wall Street is bullish on it, as it says right here. This is out of Seeking Alpha, guys, well-respected magazine that deals with stocks and so on and so forth. But guys, I think it's a very good stock to put on your radar. I know I've said it about 1,000,000 times, but I'll say it one more time. It is a great stock for short-term or long-term. Guys, look it up, do your own research. But as you can see in this article I read, I think it's gonna do awesome. This is Crypto and Stock Talk with Jaime G. Hopefully you guys found this video useful, guys. If you guys did, do me a favor, guys, and smash that like button. Maybe leave a comment down below and consider to subscribe to the channel. And if you if you guys know anybody that is might be interested in the channel, share the channel, guys, with your mom, your dad, your grandpappy, your auntie, whoever, your neighbor. Let them know about Jaime G. It brings the latest, guys. What else was I gonna say? Oh, stay tuned for the tomorrow's video, guys, in the shipping sector. All right, guys, have a wonderful night. Peace.